You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It is September 16th, 2021. If you've been watching the markets like we have, well, you've seen that precious metals have just been mercilessly slammed down. Not to mention that this is a quadruple witching hour. The last time gold got slammed down like this was back in June. Also another quadruple witching hour. And if you're not familiar with that, that's when 4 different classes of options contracts expire. And there was an article recently that some $2 trillion worth of options are set to expire this Friday. So with us, and now we have a good friend of mine, Brian Leni. You find him at juniorstockreview.com. And Brian, first, welcome back. Oh, and if you got a question for Brian or myself, email us, kl@kerrylutz.com. So Brian, to the amateur investor, this might be an upsetting phenomena, but to us professionals, what's your take?
Honestly, given what's going on in the world, I am sort of surprised that gold hasn't been able to get over the hump that has been kind of the $1,800 mark for the last, a few weeks. Actually, since you remarked about the bump down to the high 1600s back in June, the amount of debt, the situation with COVID. To me, gold is probably or arguably the most important asset that an investor or someone who wants to maintain their wealth should own. Therefore, I'm really surprised that we haven't seen more strength in the gold price. But in saying that, like you said, for those that own it, they're glad that they own it. And for those that want to play the market, this brings up perfect opportunity to add to your positions in the best of the best junior gold companies that are out there.
Yeah. So, right. I mean, this is just a short-term gyration here. Nothing's changed. The debt keeps going up. Government's becoming more unstable. Currencies becoming more unstable by the day. And yet they can still manage to kind of set the table and at least in the short run, make these markets go where they want them to. What I find amazing is every commodity, with the exception of gold, silver, and platinum, is on fire. Commodity price inflation, natural gas, U.S. natural gas, up 130%. Food up, coffee is up 40%. Oil, gasoline, 70, 85%. Gasoline's up 85% in the U.S. All of these things. And yet, precious metals, gold, silver, platinum, seem to be in the dumps.
Yeah, it's quite incredible. I make a big distinction between why I buy the metals, precious metals in particular, and why I invest in the junior companies. To me, precious metals are investment in gold and silver. You buy them for insurance and to maintain your wealth against financial calamity. Sort of what we've seen over the last, probably 13 years, kind of since 2007, 2008. And I buy the junior resource stocks because, they are speculations on people and their ability to execute on action plans and get their value recognized by the market. So for me, I look to maintain my wealth with the metals, and I look to increase my wealth with the junior stocks. I have a dual mind on when it comes to higher metal prices. On one hand, I'm glad because it invariably flows into my stock portfolio, and that's a good thing. On the other hand, high gold prices, high silver prices mean that financially and probably socially, there's a lot of bad things going on in the world. So I really view it as with mixed emotions. But the junior resource stocks have come way off, and they've really disconnected. Like, although I was kind of painting the picture of gold not being able to get over a hump at 1800, really it remained quite consistent. We've seen a steady, sideways trading for the last at least 4 weeks. And conversely, the stocks have traded down. And I'm not really sure exactly what that means. But it's not typical to the trading patterns we've seen in the past. And to me, considering everything that's going on in the world, it does speak opportunity to add to positions. Of course, positions that are down only because of sentiment. If they've had bad drill results or there's something that has changed in the story, obviously these aren't positions you want to add to. In fact, you probably want to dump them and take the tax loss and put it into something that's performing or has more potential to perform in the future.
Yes, for sure. So, one of the things that's happened with these junior miners, the Assay labs, they're so far behind. And they've really kind of distorted the cycle here, haven't they? The results are taking 2-3 times longer than normal. And as a result, the drill season's impact is kind of attenuated and kind of weakened. What's your take on it?
Yeah, no, it's crazy, especially depending on where you are jurisdictionally in the world. I can remember earlier, there's a company I owned in Argentina, and this is kind of like in the height of the COVID pandemic, and their assays had to go out of Argentina, across to Chile, and then up to Peru to be assayed. And the whole process put things back like 4 to 6 weeks. Then you hop into this year, a lot of money was raised on the back of a rising gold price last year. And, everybody is drilling across the world. And now Assay Labs not only may be restricted by, COVID restrictions, but also just like you kind of hinted at, by the sheer volume of samples that are being put in them. Quebec's a great example. I can name probably 3 or 4 companies that have 100,000 meter plus drill programs going on right now. If you are a small company in Quebec, and you're looking to get your drill core assayed, you're going to be waiting in line behind these behemoths that have kind of taken up most of the spots. So, it's while patience is a virtue, it does make it hard when the whole market is kind of imploding and people get impatient and start selling their stock for no reason, but because they're impatient and worry or concerned about, the share price falling because of something that they don't know and that is, potentially bad. So for me, like, I've been adding to those positions on those good exploration companies that have, assay delays, yet people are getting impatient. And to me, it spells opportunity.
Hey, so patience is definitely a virtue when it comes to resource stock investing here. And all you have to do is buy a couple of them and watch them for a while. And if you buy them at exactly the right moment, they're going to go way higher. But if you buy them because you think they're a good value and you're not looking at the timing, it could be quite a while before you actually see the return that you're looking for, if ever.
Don't just survive, thrive. The Financial Survival Network.
Trilogy Metals is a world-class developer in Alaska's Ambler Mining District. The company already possesses 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million gold-equivalent ounces, and now over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% IRR. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades on the New York and Toronto exchanges under the ticker symbol TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, absolutely. Well, that is one aspect about being a value investor. Being a value investor, you're mainly focused on companies that have intrinsic value. So that's, ounces in the ground or some sort of cash flow in some regard. In a market like this, where sentiment is so bad, where good news is sold instead of bought, it is sort of troublesome in some ways of being a value investor because the value isn't recognized or nobody really cares. So So patience is a virtue. And if that's your mode of operating in the market, such as mine, patience definitely does have to be a part of your repertoire and your mental state. Because I've been told from a couple of mentors, they said, look, and it was on the supposition of value traps. And they said, look, a value trap is essentially one of the better mistakes you can make, meaning that the market won't recognize that value for whatever reason. But usually the worst you're going to do is, your money isn't going to be working for you, / you might come out even on the trade. You can do much worse. So in a situation like we have today, while value is the way that I invest in the market, I have to realize that, you can do much worse in how you pick stocks. Have a hunch, bet a bunch. It doesn't work. And especially in moments like this where the market is so bad, those are the first, companies that are going to see their share prices go down. And in fact, it probably will go down much further than those companies you buy because they present a good value proposition, which, may or may not have been recognized by the market yet.
Yeah, well, boy, if there's ever time when you start second guessing yourself, right? Got to be now, huh?
That's right. That's right. And that's just one of the things that I think all investors have to get used to. There's very few, or at least I parallel it to my kind of experience in the market where I've seen very few portions of the cycle where everything is going in one direction. I've had to, withstand volatility more than anything, which, means that you're seeing both sides, the up and the down. And it is tough. It's hard. It's probably the hardest thing is to control that emotion and remember that your investment is based off something quantitative. And that, again, it's probably more a matter of time if you've done your due diligence right. And if it's just a matter of time, again, another Rick Ruleism, if it's a what question instead of if, those are the positions you want to be in. And in fact, if you were early to an investment, the true contrarian, it is going to be a while before that value is recognized. But ultimately, that's how you make your biggest gains and you protect your downside by the most. So,
as a resource stock investor, you're always aware of cycles, though. And when you see that nothing's happening, it's got to be frustrating to you.
Yeah, absolutely. It is 100%. And it still goes back to what you said before the comment. It makes you think that you're not seeing something. And I've felt that many times. Like it's kind of like when you see a big short position open, you've done all your due diligence on a company, you take a big position and good news has started to flow. And then you see this huge short position open and you think to yourself, wow, like what did I miss? And, you just have to realize that you may not be wrong. There's people that try to play both sides of the market and it's not necessarily based off anything. They can make the same mistakes, the mistake of pessimism instead of the mistake of optimism. There's both sides to that trade. But absolutely, it makes you rethink yourself when you see sentiment so bad. You see people that possibly don't know the reason to own gold in their portfolio or such. And, you second guess yourself, why am I in this? But I think, again, if you've done your research and you understand, you need to have confidence in yourself and you need to see the investment through. And that's kind of the process I take and how I go through it. And although it is, difficult at times, I've learned that that's what will make you successful in the market.
And that's why we're here talking success in the market. Brian, I know you had other careers. You got into this later. What led you to the newsletter writer expert path here?
I don't really know, to be honest. The reason why I got into the whole precious metals area is because I started learning about monetary policy and kind of looking at the geopolitics of what was going on in the world. And in my view, I needed to own precious metals. Invariably from there, if you listen to enough people that commentate or talk about precious metals markets, you start learning about the mining companies, in particular the junior mining companies, which, of course are, the sub-billion-dollar market cap, have no cash flow, and really are just speculative vehicles. And that's what I got the interest. And of course, I was able to, develop a process that I did really well in the market in 2016 and left. And then invariably from going to conferences, I met a bunch of different people. You meet a variety of people. And this is one thing that I really miss about going to conferences is meeting that huge variety of people. I started talking to different people that are from different backgrounds. And there was a couple guys that said, you know what, you should start writing about what you invest in. And so I did. And, my Junior Stock Review started out as, a free newsletter. And I was writing that for about 4 years. And then, in the last 2 or 3 years, I really put my process together and I was able to make money kind of regardless of where the market was going. And I credit that, I do take some of the credit myself, but I also have had some tremendous mentors in my life and they've made a huge difference. So that success and that process that I've been able to put together, I thought to myself, you know what, I can't actually help people understand how to invest successfully in the market. And so last year I decided I'm going to start a paid newsletter. And of course, it was interesting because last year, of course, I started the newsletter last February. Impeccable timing. And I thought to myself, oh my, I can remember I was actually sitting with a couple friends at the Red Cloud event in Toronto. It was the pre-PDAC conference, and the market was it was the first Friday where it imploded. And I thought to myself, oh wow, you've really done well this time, spending this money to set up some infrastructure to do the newsletter, and then this is what happens. But in saying that, it was the perfect opportunity to deploy cash. And at the time I was, 50% in cash. I had money to put into the market. And I was, of course, telling my subscribers to do that. And I know, I got emails back from a number of people that said, you know what, thank you for, the advice and the guidance that you provided, because it helped, have courage to deploy cash in a market where I think if you were just on your own, maybe you might have thought, oh, I need to run for the hills and stay in cash. But, in my experience, and any of my mentors that I've ever had have said to me, your money, if it is a true catastrophe and the market is never coming back, then it doesn't matter if your money's in your bank account or in your trading account in a junior stock. So as long as the company's share price is not falling because of an inherent flaw in that company, any drop in price is a buying opportunity. And for anybody who deployed cash last March, in March 2020, you did very well in the market, especially if you were invested in the better half of the companies. So that's kind of the story of how I got to where I am today. And that's how I proceed in the market with myself and how I write the newsletter.
All right. Well, if you had a past life, if you believe in such things, I have a feeling you were the guy who bought the ticket to the Titanic. You got it for a great discount price and hopped on there, and next thing you know, you're investing in precious metals, right?
That's right.
Just kidding, but you know what I'm saying, man.
Yeah.
I always say timing is everything in life, and my best plays in life have been contrarian plays, and certainly hopping in here with both feet, March 2020, after a humongous crash. Is the equivalent of, whistling past the cemetery, actually singing opera past the cemetery. and it worked out for you. So if you want to get the newsletter and connect with you on the web, how do you do it, Brian?
You can go to juniorstockreview.com and you'll see the link to premium in the header. Alternatively, if you have a question directly you want to ask me, you can email me at juniorstockreview@gmail.com, and I happily answer any of your questions.
All right. Hey, well, it's great to have you on. If you got a question for Brian, you want to run it through me, kl@kerrylutz.com. That's the email address. Make sure you sign up for our newsletter at financialsurvivalnetwork.com. Brian, pleasure. And really appreciate you stopping by. Good luck with the newsletter, and hopefully better times are ahead.
Thanks for having me, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.